This is the Trade of the Week by Exxon. My name is Stanislav Bernakov, Senior Trading Content Specialist here at Exxon, and in today's video we are going to be checking on a possible trading idea for the week ahead, the narratives behind it, and which economic data could potentially affect this trade. But before, let's see how the previous idea performed. There was a possible long position for gold with a target around 4,700. The idea was fully accurate and reached the projected target several days after the publication. Thus, in total, analyzing the last 50 ideas, we've brought 38 of successful ideas, while 12 of them have not reached the projected targets. That means a rough 76% of a hit rate for published ideas. Well done, though please don't forget that past performance does not guarantee future returns. For this week, we are monitoring a potential long position for XOM, Exxon Mobil stock, with a target area around 172.50. The price had bounced off the dynamic support area around 160, the 20-day moving average level, and given the strength of crude oil futures, it might retrace for another short-term upswing. As the stock moves in a strong uptrend, the retracement scenario looks more favorable rather than decline, as the trend often has inertia and may lead the price action higher during this week. The possible target is located around the upper band of the Bollinger Bands. What is the narrative behind this idea? On the one hand, markets are pressured by tensions following the verbal confrontation between the US and Iran. On the other hand, traders already start pricing in a possible resolution of this crisis. Maybe not immediately now, but maybe sometime in the future. So oil prices still remain high as the Hormuz Strait stays closed without any resolution. But stocks in general gets the impulse for growth as volatility declines and risk appetite slowly gets back to the stock market. The energy sector still displays the strongest performance among other stock market sectors as oil and gas companies are about to produce increased revenue out of this crisis. For example, earnings estimates were revised to the upside for 19% for Exxon Mobil by analysts ahead of the upcoming quarterly report. So combining two factors together, returning risk appetite for stock markets and high oil prices, we may expect the bullish momentum for oil stocks to continue. Which economic data traders would pay attention to? This week traders will await the publication of the US PCE index on Thursday, 12:30 GMT. This is the important inflation benchmark, and inflation especially is important today as oil prices lift expectations for inflationary effect. And the main focus of attention, of course, is the situation around the Hormuz Strait and the US, Iran and Israel conflict. Currently, there is no consensus in the markets whether ceasefire or possible negotiations will take place rather than further escalation. So this is the intrigue and traders will pay attention to that. So in summary then, the idea for this week is a long XOM with a possible target of 172.50. Returning risk appetite and high oil prices will likely keep the energy sector moving. Apart from geopolitical news, markets will be looking forward to the publication of the PCE index on Thursday, 12:30 GMT. Remember, this is not a signal, it's just the idea for a trade, it's not a guarantee of success. Always do your own research and never forget to manage your risk.